All right, here we go. Another Power Profit Strategies podcast. Chris, good
Tom, how are you
afternoon.
doing, man?
I'm good. I'm sporting a home team.
I saw that. I saw
Atlanta
that. I,
in the house.
I saw that. No Braves though. I mean, you should be wearing the Braves right now, right?
I should be. This
They're
is
on
the this is
fire.
the this is the warm-up jersey for the
Oh, okay.
Hawks.
I like it. I like it quite a bit.
We got a good show for you guys today. We're going to talk. I mean, look at the bottom. I got the topics right there, so we don't screw things up. Bitcoin, stocks, gold, U.S. dollar. We're going to do a comparison of all those. Last week we talked about interest. We talked about interest income. I talked about SGOV. I got my payout on SGOV. That came earlier this week, Chris.
End of the month, right? That's like almost like a government check, so to speak.
It's a government check from the government, and
Yeah.
and what they do is that it's paid off the end of the month or the very beginning of the month, but then they pay it a week later. So I actually got it this week, and it's a good thing too because look what else showed up. You see that?
Nice.
That's my electricity bill. That's not nice.
What? I think there's an extra
$1,300.
digit on that. That's not an electricity bill.
It most certainly is an electricity bill. I got to shut the logo off. I got to shut the lights off. I got to conserve some energy here. We're burning too much of the midnight oil over here at the Profit Strategies podcast.
My gosh, that looked like a mortgage for some people, or at least a car.
It's
I thought
terrible.
I thought I had a bad
terrible,
here. But
as Charles Barkley says.
you're also working your way through the dog days of summer down there with your 90-degree temperature, and yeah,
It is. I mean, most of it is air conditioning. We've got excessive heat warnings happening here every day. I got another one. It's on the notification right now. It's not going to be gone till the end of the day. But that's not what we're here to talk about, folks. We are here to get into this week's topics. In this week's topics, I want to get into comparisons. Let's start off with this, Chris. I did a comparison, a year-to-date comparison. What's going on since the beginning of the year? The number one asset year-to-date is not the market. It's not gold. It's Bitcoin. So because the beginning of the year, if we start everything out equal, BTC is up 75%. And, so if this is a race, Bitcoin's in the lead right now, 75% up year-to-date. The QQQ, I'm looking at that one because it's really tech heavy because it got hit real hard last year. Well, so far year to date, the Qs are up over 40%. Compare that to SPY, which is up about 17%. And then lagging the group, and I'm only looking at 4. Lagging the group is GLD.
Yeah.
Still up, but up only 5%. So I want to talk about each of these. First of all, Chris, do you own any Bitcoin in your portfolio?
I do indeed, Tom. Yes, I do. Of course.
Good for you. I was one of those. I guess it was. I want to call it. I'm not going to call it dumb luck because dumb luck is something falls in your lap. This was smart luck, where my son. It was almost. It literally was 10 years ago. It was 10 years ago when he suggested that we get into Bitcoin. And suggested we get into mining Bitcoin so we can understand how the whole blockchain technology works. And I said, okay. So I bought a refrigerator-sized computer, a small refrigerator-sized computer, not a big one. Small refrigerator-sized computer. It had, I want to say, I think it had 24 fans on it, if I can remember correctly. 24 fans on the back just spinning. Sound like a beehive. So I put it in the house. I put it in the loft of our house. You could hear this thing in the master bedroom. It was so loud. It didn't stay in the house for very long. Wife said, get rid of it. I took it to the garage. So now 10 years ago, we just bought a new house and it didn't have air conditioning. It was a brand new house, but it didn't have air conditioning in the garage. Now, you know what's worse than a garage that's not air conditioned in Florida?
No, actually, I don't.
Here's one. A garage that's air conditioned in Florida that you're also running a Bitcoin mining machine in, because it was, outside it was like in the 80s to 90s. In the garage, it was over 100 degrees. Bitcoin, if you remember 10 years ago, was only trading for hundreds of dollars, not thousands or not even tens of thousands of where it is now. But I mean, where's Bitcoin trading at today, Chris?
Today we're just under 30,000. It's been bouncing below that 30,000 level. 29,500 is the last print that I saw it. So it's really trying to
Yeah.
push higher and get up above a couple of technical thresholds here that'll really give it a boost. But yep, right below that $30,000 level.
And you know what's interesting? For the last few months, it's literally gone nowhere. I mean, it's been just caught in a trading range. And I really thought interest rates were going to pull it one way or another. And we've had a couple of interest rate hikes. It hasn't pulled it.
No.
You look at some of the stuff that you're hearing about, like, more importantly, these downgrades that happened last week.
Yep.
First you had Fitch, then Moody's. Started hitting the banks. By the way, You talked about bank stocks last week.
We sure did, didn't we?
I got to come back with you. How are the bank stocks that you're looking at holding up?
Well, the bank stocks I'm looking at are some of the larger ones. Those are in favor with me. We talked about sentiment and how that's unwound from that just dire, just everybody hated banks in March after we saw a couple of those failures. Now, you know what? When we look at it, the regionals are a little tippy right now, I'd say. I don't want to say toppy, but I think everybody is a little gun shy that, we could see a little bit of a ripple through. And Tom, I was just looking at this yesterday. I was doing a little bit of writing on it. Guess how much the KRE, the regional bank ETF, has gone up in the last month? Guess how much?
I have no idea.
18%. The NASDAQ 100, one of the hottest sectors or the indices out there, ETF is the QQQ, is up 0.6% for the same period. So everybody's been running into the banks. And I think that this is one of those, you and I both love a sentiment trade. I think this is one of those sentiment trades where everybody ran to the other side of the boat a little too quickly here. And all of a sudden, as you mentioned, Moody's comes out and says, hey, we've got this list of 8 banks that we're downgrading. And then more importantly, they put some of the bigger names, your U.S. Bank Corp and a few others, on alert that they're kind of looking to do the same thing. It's all about the balance sheet.
I was thinking about you when that downgrade happened, and I thought, is this possibly a buying opportunity for some of the larger banks?
Yes.
And not only banks, but even brokerages. I'm looking at some brokerage firms. Like Charles Schwab's the first one I could think of. I mean, these guys, have trillions in assets. And yet they're being, they were months ago were being thrown out with the likes of Silicon Valley National Bank. Not to that kind of, but you go look, anybody go look at a chart of what's happened to Schwab, and Schwab even just mean reverting. You throw that in the 70s as a longer term opportunity, but it revolves back to your idea with banks, brokerages, insurance companies, because you can basically throw them all under the same umbrella.
Right.
So, is that your plan, is to use the news of last week as a buying opportunity for the strongest herd?
Yeah. I mean, you know what? Well, if we're looking for buying opportunities, can I expand the conversation out? Because I know a lot of people talk about seasonality, Tom. And when you're talking about the stock market, I love to hear about the money calendar and your view on where, these weekly moves in the market are bound to happen. But when you look at that, we're kind of in that summer doldrums. The excitement of earnings seasons run out. I mean, you've got the retailers and a few others, but all the big headliners are done. So I think your buying opportunity for the banks, for technology, for a few other things are going to be during this summer slowdown. Everybody is, kind of go a little risk off, or that appetite goes away. Think about it. Just 2 months ago, Tom, people could not buy enough of anything. AI, enough of the banks, enough of not energy companies, but they're in favor now. They had a risk appetite that couldn't be quenched. Now it feels like they're kind of full, and they're going to sit back at the table for a few minutes and maybe digest and see where the market goes through August and September. I think your buying opportunity is going to be during that period for both the market and some of these banks.
Yeah. So, back up to Bitcoin, because, the podcast is a chance for you and I to just go all over the place. And we absolutely, we stick to that rule, which is no rules. But, you and I were talking about Bitcoin, and our next technical high on that is what?
I'm looking at a 35 to 37,000 target.
I'm with you on that.
37 is a nice little reach up to the top counter, right, or top shelf. But tell me why you like that. Why you're
Well,
with me? What are you looking at?
I mean, you don't even have to be a math genius to figure this out. Higher lows and higher highs. Take the last low and the last high. Take the difference between that and add that to what could be the bottom that we're seeing here over this week. And that puts it in that 35 to 37,000. We call that in anything, we could just call that a throttle up. More technical traders will call that a Fibonacci extension. All right. Maybe even trend extensions. If you take, you could take some trend lines and do the same thing too. There's a number of different ways that we could play that. But I mean, absolutely. I'm with you. I think the 35, 37, and I think it's long overdue. And I think it's going to, when it does happen, Chris, we need to get above 31 and we need to stay above 31. We get above 31 and close above 31, then I think you're going to see 35 real fast.
Real fast. We'll take out that 32, which was the highs in July. So we had that little pop up and just little retracement. Two things I'm going to point out when I look at this Bitcoin chart, Tom. First of all, you know how much I love it. You already said it. When either a stock or the market or something like Bitcoin gets quiet and we see that consolidation that goes sideways, you know what I'm going to say now. You've got that volatility that kind of scrunches down. You can use a Bollinger Band. You can use whatever it is that you use to gauge that, but you can only keep it scrunched down for so long. And right now we're in that stage with Bitcoin where the market has squeezed it into this little consolidation range. Yeah. And when it pops, it's going to be like one of those beach balls popping off, when you push it down under the water. 32 goes.
That's a great analogy. The one I use is if you take a spring and you coil it up and leave it in your hand, and when you release it, that spring's going somewhere. You may not know where it's going. It might hit you in the eye. It might hit your friend in the eye.
Right.
If you're all standing there and you're playing the game of where's the spring going to go, and you release your hand, it could go anywhere. But it looks to me like the path of least resistance is to the upside because the down has held so well.
Well, you give me a great segue for my second point. The first one is the volatility events coming on Bitcoin. Yeah. The second is the trend. So you know how much I love the 50-day moving average. That is the trend line that embodies that the trend is your friend rule, right?
Yeah.
Right now that sits at 29,981. So if we take out 30,000, we get back up above a 50-day moving average that's trending higher. That's a bullish move. And you take out the 30,000 level. That's a psychological. You and I both know that the market loves round numbers breaking through them. There's your fuel for this rally.
Yep. Okay.
I like your Bitcoin position there, Tom. That's
Bitcoin. Now, we started talking about the stock market, and we kind of went into banks, and then we backed off. But let's talk about the stock market for a moment. So, the tech stocks have enjoyed a really nice rally. And my big tech stock that I own in my portfolio is Intel. I've had that for a while, and I continue to hold that, and I have no reason not to hold it. I think if Intel gets up to 40, I might sell some calls against the position. I might take some of that trade off. I might do both. I might take half the trade off that I have, and I might take the other half the trade and write some longer term call options on it. But that's kind of I believe Intel was kind of late to the party with AI.
Oh, yeah.
But I also think that them being late to the party is kind of like fashionably late. Because they're going to come in and, they're going to be wearing the prom dress that everybody else wanted, but they ran in early with whatever they could strap on. And I believe Intel is going to be a major player because how would they not be? And they got so much in their coffers right now. And with the U.S. government giving them some chips, them some extra chips with their dip.
Literally.
I just think that the reward to risk ratio based on cash is quite high.
I agree with you. Every bit of it. Intel, I don't know if I've ever told you this, Tom. Random fact. My first options trade ever, I bought a call on Intel back in 1991, maybe 92. Had to call the floor back in those days to actually buy. Yeah, you had to call and get a bit. Intel. That's my love affair has never ended with Intel. It's been rocky the last couple of years, hasn't it? But this company's turning around. Yeah.
Since you said it, my first trade I did was also a call option, and I had the call for the call option, and I did it from a very large retail place chain that I worked for. They dubbed themselves the largest home improvement chain. I'm not going to say their name, but I think everybody can probably figure that one out. But I remember it was a corded phone too. It wasn't even cordless. It was a corded phone. And I was on break, and I was using the corded phone. I dialed 9 for an outside line because that's what you had to do back then. And I dialed my broker, and I placed my very first options trade. And you know what it was? It was on the company that I was working for. I was using the company phone to place an order to buy some company options.
Company guy.
Cool.
All around company guy.
But you know what I was using for a bank? I was using a bank for a broker. I don't know what you used, but
this is back in the days when I worked at a brokerage firm. So I just got my Series 7 license and all of that. And my mentor, he'd been teaching me options. And one of the things he said is there's no better way to learn than to actually trade them with me. And bam, I was fortunate back in the 90s to have a mentor that traded options. So
were you able to do a commission-free trade since you were working for a broker?
Oh my gosh, no, Tom. Remember what commissions were back then? You paid $300, $400, $500 for an option.
Mine was $100. I remember. And I also remember looking at it and saying, wow, the commission cost more than the option.
Bingo.
And the guy that I was on the phone with said, buy a longer term option rather than buying several short-term options, because the amount of commissions would have eaten it up. It was hard to make money back then.
It was.
Unless you were long-term sitting on long-term options. So anyway,
I wanted to ask you a question real quickly.
Yeah.
I'm sorry. We're doing our squirrel thing. We're going off on shiny objects, but you mentioned something key, and I don't know if a lot of people are aware, and I think we always assume it. So you said you want to write covered calls on Intel. Just a quick 1 minute for somebody who doesn't know what a covered call is. What does it do, and what do you gain out of that?
Well, covered call trade is just very simple, folks. What you're doing is you're selling call options against stock you already own or stock you intend on purchasing as a simultaneous purchase and sale. Purchase the stock, sell the call. When you're selling that call, or what's called writing that call, you're basically have a premium. And by getting that premium, you're obligating someone on the other side of that trade to exercise their right and carry away your stock at that strike price. So the pros are you're getting a payment for that. You're creating a higher probability trade. So statistically, you're actually creating a statistical profit, probability profit. But what you're paying in the end is the obligation to carry your stock away, which, and I'm not a tax accountant, so you'd have to check with your tax accountant, but that could be a taxable event depending on where you purchase that stock at. It's more likely going to be a taxable event on the option if it gets called away, because win, lose, or draw, if it gets called away, you're basically you're receiving a premium for that to get called away.
Right.
So, but that's a covered call. It's something that is literally one of the first steps that most option traders take. Is they when they hear about options, the broker loves covered calls because, again, you're not putting the brokerage firm at risk when you do a covered call. You're assuming a lot of the risk there yourself. So,
and you generate a little extra income on a stock that you already own.
Yeah, absolutely. Yeah. So let's move forward into the final topic here. So, unless you have some final thoughts on the stock market and really where you see the stock market going here for, as we head into the end of summer.
Again, I think this is just the time to sit back, not get too involved in chasing anything. Put your list together. That's what I'm doing right now. I'm putting the list together, my wish list of what I can buy where. Microsoft down below its 50-day moving average. It is down, 12, 13% from its highs. I wouldn't mind grabbing a little Microsoft if it were down a little further. So get your list together right now, folks. And, I think you're going to have some opportunities for some values.
Before we get into gold,
yes,
let me tell you the one stock that I'm very interested in right now.
Let's hear it.
Are you ready? Because this one's going to be a controversial one because we're hitting them every. Target.
Ooh. That's a hot take.
Look at Target. Look at Target TGT, because everybody thinks about Target and they think about the mess they made at the front of the store. Yep. That caused so many conservative shoppers to go running for the exit doors. And Target stock went from about $160 a share. That was where it was just after their earnings report. And I mean, this thing went all the way down to 125 or so. And then it looked like it was going to bounce back. But lo and behold, we're back down to around 130. And get this, earnings are next week.
Ooh.
Earnings are next week. And more importantly, I want to set the stage for everybody who's watching the podcast here. All right. So I want you to think about a stock that was as high as $180 a share earlier this year. It's gone down. It's gone from 180 down to 125. It's kind of bounced back a little bit, but it's rotating south again as we're going into earnings next week. You know what else is rotating? The options volatility. So I don't want anybody out there thinking Tom's going long on Target right now. We need to start buying calls. That's the last thing you want to do. The last thing you want to do is to go buying call options. To me, that's like buying Johnson & Johnson, in the middle of COVID when they're coming up with a solution, all right? Because we saw what happened there. I mean, if you look at Pfizer, Johnson & Johnson, these guys are on lows right now because COVID for almost everybody's opinion has ended. No one's getting booster shots anymore. They got all this inventory hanging around, but to me, that represents potentially a buy in healthcare because you always want to look at the opposite side of what everyone else is looking at. The best time to be a seller of healthcare was everybody's talking about it. The best time to potentially be a buyer of healthcare is right now when everyone says, oh, they're all in the dumps right now. So take a look at Target. Target is basically in the dumps. But more importantly, that option volatility is I'm going to take a venture to say that next week before its earnings, I believe that option implied volatility could be higher than it was earlier this year when it was trading at its highs for the year. And that is almost double where it was right after the last earnings announcement. So we're talking about option premium, folks, that's going to cost you twice next week what it was going to cost you about 3 months ago. Right. Wow. So think of it as a reverse, buy one, get one. It's not buy one, get one. It's buy one, pay twice.
Right.
So if that's the case, I would look to be wanting to sell option premium on this. I would look to want to sell option premium if you think Target has the bounce. Okay, if you're looking at potentially a long-term bounce, even if you think it's just going to sit still down here at the 125 level, you could be owning it well below that going out toward the end of this year. Right, and looking for Target to have some sort of a turnaround. What's better, Chris, than a hero who has fallen? No, because Target was a hero to everybody. They were eating Walmart's lunch. They just had a better look than Walmart. They looked like the classier version of Walmart.
Oh yeah.
Now Walmart's looking like the classier version of Target. But you know what's better than a hero fallen? A hero fallen who gets up again. People,
this is true.
Story. Love to hear the story of the hero that has fallen, that is making a comeback. And I think you're going to see that. I think you're going to see that with Target. Target's not going to sit on these lows for very long. They're going to get through. I think they're going to get through their pains. Look at Budweiser. What Budweiser do? They sold off 8 brands. You know what they're doing? They're collecting cash right now. They're collecting cash because I think that this time next year, all this is going to be behind them. They're not going to be able to spell Dylan Mulvaney's name. And I think Budweiser is going to, they may just sit back and not push the Bud Light brand for a while. They may have to bring the horses out and start kicking the Budweiser brand. They may start having to kick Mick Ultra and all the other things that are, because it's so much. They have 10 times the stable of brands as Bud Light, and I think you're going to start seeing those brands being pushed more.
Oh, I absolutely agree. I mean, Budweiser, you just mentioned it. When everybody is saying, holy cow, I don't want to own this stock. When blood is running through the street on a stock, as it has been for Anheuser-Busch, for InBev here, it is a time when you look at it and say, hey, if nobody else is wanting it, then everybody else has probably sold it already. Time to step in. It's a vacuum. You let me throw one out because you brought up Target, a retailer, because we'll stick with and we got retail earnings coming up here in 2 weeks. Really, Target trying to kick that off.
Yeah.
Kroger, KR.
Oh, the
Oh,
safest of the safe.
huh?
They're. I mean, you know what? They're not even in. They're not in Florida at all. But they're making a footprint in Florida. Not a footprint, but a tire print, because their
Delivery.
delivery service is killing it down here. I see
They
the Kroger trucks running up and down, running across the state all the time. They are
Yeah.
doing something in Florida without bricks and mortar.
Tom, they
What say
are
you?
when because Kroger, smile when you say it. It's a Cincinnati company here, so we get to see a lot of these things as they're unfolding. And one of the things that they started doing 2 years ago on the back end of the pandemic, ghost kitchens inside of the Krogers. So
Oh,
Guy Fieri opened up 60 or 70 of his, I forget what it's called, his restaurant chain,
hmm,
and they did the majority of these as ghost kitchens. So you can't go in and sit down and eat, but you can get it delivered by Uber, by whoever.
right.
Somebody at Kroger went, "Ooh, hold on a minute. We'll put some of these ghost kitchens in the back of our store, and they'll buy their supplies from us as well. We'll have people coming in to pick it up, etc." Kroger is the cutting edge grocer out there, and they're pushing hard on Walmart's door to be number one here. We'll see what happens with Albertsons,
And
but
let me mention this too, Chris.
yeah,
While Target is sitting on 52-week lows, or very close to 52-week lows, Kroger is sitting at near 52-week highs.
yep.
So
This,
one is a momentum play. Kroger would be a momentum play off the top, and Target would be a contrarian play,
yeah,
as it's reaching the bottom. So,
love it.
I mean, one of the things that we do, that I do as a trader is when I look at something like that, I'd look at a high probability trade on Target, and I would look at, and this is just my thoughts on Kroger. They don't have earnings coming out for a month,
Mhm.
but I would look at potentially uh, a run on a stop above 50, close above 50, then maybe buy it on the old Jesse Livermore version is that buy it on a new high so that
Right.
you're buying it going in the right direction.
Yep.
So if it truly warrants a $50 high, which would be the first closing high that I could see all year long, because it never closed at those prices.
No, it hit
Above 50.
60 in 2022 at the
Yep.
beginning, but it hasn't seen above 50 since then.
Yeah.
Yeah.
Yeah. All
Yep.
right. Let's finish up with gold.
Let's go.
Let's talk about gold. So gold has been really kind of the lackluster of the commodities right now. I've heard so many people, a year ago, even earlier this year, saying gold's not worth its weight in gold. Bitcoin's the better alternative. Well, a lot of folks were right if they were talking about it from the beginning of the year, because GLD, which is what I like to track, GLD I mean, if you look at it, going back to last year, yeah, we hit a double top around 190 on GLD.
Mhm.
And it came off. I mean, we're talking about something that coming out of the end of the year, we were in the 160s. So if you take a look at even this year, okay, this year's lows, you got to go back to the beginning of March, and you're talking about prior to like 169. And then the highs were around 190 and change. We've had a pullback, right? We've rallied out of that pullback. But in the last couple of weeks, we've gone from the mid 180s down to 179, 178 and a half. And that's where we sit right now. So we are sitting right into what I like to call an equilibrium between monthly highs and monthly lows. Monthly highs being around in the mid 180s, monthly lows being in the mid 170s.
Mhm.
We're sitting right in the middle of that. So there's that coiled spring effect. There's that beach ball effect you're talking about. I have to think, and I'm thinking long term, that gold is going to be one of these quiet assets that moves outside of the range it has. And I think we hit new highs, but I don't think it's going to happen next week. I don't think it's going to happen next month. I think it's going to be election year. I think this is going to be something that, as we turn into election year, what's going to happen. It happens almost every single time. The administration it's currently in is going to say, what are we going to do to get reelected? Let's give them all something. You know what they
Yep.
like to give? They like to give money.
Money.
They love
Yeah.
to give money. They love to give little perks, and all of that usually costs money. And so, you know what? How do we do that without taxing everybody? We just liquefy.
Deficit.
We ease. We do
Right.
quantitative easements. We reduce interest rates. We allow the flow of money to become easier, not harder. And you know what that does? That pushes prices of stocks. That pushes prices of commodities higher. And really, the one at the caboose that just hasn't failed to move with everyone else is gold.
Yeah. Yeah, I agree completely. And Tom, the other thing that's funny about that is you mentioned this last week. You can sit in something that is backed by the government or backed, if you're looking at treasuries or something like that, you get 5%, Tom. If interest rates start coming back down, like you're kind of saying, that's the other thing that is just going to pile money into this market. All that free money that's sitting around getting 5.2% in your American Express account. People are going to have shovels. Gold will react to that. Obviously, I think you'll
Absolutely.
see this will be one of those breakout moments for gold on the
Everything.
trend.
I mean, everything in that I'm looking at in gold is on the lower end. Maybe Kinross is one that might be a little bit, but this is a dollar. I mean, this is a $5 stock, and so Kinross Gold is a little bit towards the other end now. They had some good earnings that came out last week, but the more potent question as I look at this is, how do you, if you're taking that interest money in,
Mm-hmm.
maybe putting some of that money to work in something like an SPY or a GLD, like you said, in case the interest rates fall. And folks, if you haven't seen it yet, I had a video that came out very recently on how we could create the virtual risk-free trade, where you take that money, you rob from Peter to pay Paul, you rob from interest rate securities, and you put it into something long-term. And I'm talking about leap options, looking at leap options. And we looked at three different ways, Chris. Earlier this week, we looked at buying calls, we looked at buying call spreads, we looked at buying call butterflies, and we looked at the comparisons, everything from the cost and risk of each to looking at the rewards, looking at things like percent to double. We talked about, PTD, we talked about POP. So what these acronyms mean and why you need to look for the lowest one on one side, like percent to doubles, I like to look at the lowest, and probability of profit, POP. I like to
POP.
look at
Yep.
the highest on the other. And by the way, one of those type of strategies, to me, far outweighed the other two. And so, take a look at the video, guys. If you haven't seen that, you'll see that as well. Final thoughts before we roll out of here, Chris.
Love the trend in gold, bull market in gold still. Cool your jets on buying anything. The risk appetite's gone. Well, I'm just summarizing things. You know what? I'm gonna give one other stock real quickly because we did this last week. I like Palantir here, Tom. Good earnings report. Company boosted their outlook, and the market is taking it down another 5% today. Like we said, opportunities on pullbacks here. I think that's one of those that you put on your list.
Yeah, yeah. As I kind of roll out some of the things that I really liked that I did last week
Mm-hmm.
is Beyond Meat did some. You look at that stock is down this week because of earnings, but we went in and obligated ourselves much lower than it is right now.
Mm-hmm.
Same holds true for. It's one of the ones I had that just was absolutely fantastic. Was Celsius.
Oh,
CELH. I mean, when I saw the after hours came out earlier in the week, I was like, all right, I haven't got to worry about this one at all. And that was a pure pattern play that we did. Probably I don't call this, this wasn't, this is probably my worst trade of the week. And that was selling puts on UVXY. But
okay.
I did that because I wanted a little bit of hedge as to what, the unexpected. I wanted a hedge on the unexpected. UVXY obviously is the short-term VIX. And
Yep.
so, as that goes up, we expect markets to go down. But if that goes down, we expect markets to go higher. And so if you're long an asset like SPY or GLD or something that is interest rate sensitive, one way to hedge that would be with interest rate, with fixed income, which is, what I do, SGOV as an example. And another way to do that would be to hedge it with volatility. And so I looked at UVXY, and that's going to be one of those, we're just going to have to see how it plays out over time.
One of these days we'll have to talk about UVXY, because I think that's one of those instruments people think about buying long term. And I'm sure you've got some. There it is. That was the thought. That's a very popular instrument, and people think that it's easy money. But let's put that on the list to cover one of these weeks here.
Absolutely. The only thing popular I like about it is it's so popular, it's very liquid.
There you go.
That's one we have to learn to play. If you want to play that game, you got to understand where the probabilities are. So,
well, we'll break that down.
All right, man. Thank you very much. By the way, thanks for all the comments that we got on our very first podcast. Chris, we got a lot of comments. People like glad to be back. There was kudos and hellos to you as well as me. And people were excited. They're hoping that we're not one and done. Obviously, we're not one and done. Here's our second broadcast. It's in the pipe. We got more coming, folks. Chris, thank you so much for being part of this.
Thanks, Tom.
We'll see everybody again next week. Bye, everyone.
Bye-bye.